When people think about banks, they usually think about waiting for approvals, signing paperwork, and paying interest that seems to only benefit the bank. But what if you could flip that around? What if you could be your own banker, borrowing money on your terms while your savings quietly kept growing in the background? That's the idea behind infinite banking. It's a financial strategy that uses a special kind of life insurance policy to give you more flexibility, stability, and control. In this video, we're going to break down how it works, why some Canadians love it, and the things you should think about before trying it yourself. By the end, you'll have a clear understanding of whether this could fit into your financial plan. Let's start with the basics. When you buy life insurance, there are two main categories: term insurance and permanent insurance. Term insurance is simple. It covers you for a set number of years, like 10, 20, or 30. Once that time is up, the coverage ends. Think of it like renting coverage for a while. It's affordable, but temporary. Permanent insurance, on the other hand, lasts for your whole life. It also has something special inside: cash value. And this is where infinite banking begins. Here's how the cash value works. Each time you pay your premium, part of that payment goes into a cash value account within your policy. That account grows over time, often at a guaranteed rate, and in many cases also pays dividends. Think of it like a savings account that lives inside your insurance policy. But here's the key difference. You don't just watch it grow, you can actually borrow against it. That's what turns a regular life insurance policy into your own personal banking system. Let's make this real with an example. Imagine you've built up $100,000 in cash value inside your policy. If you needed $70,000 for a big renovation, to invest in real estate, or to cover an unexpected emergency, you wouldn't have to go to the bank, fill out forms, or wait weeks for approval. You could borrow it directly from your policy, quickly and privately. No credit checks, no questions about why you need it. And here's the best part. The full $100,000 keeps growing inside your policy as if you never touched it. That's what makes infinite banking so powerful. So what can you actually use this money for? Families often use it for big expenses, like helping kids with tuition or covering medical costs. Business owners use it to fund opportunities, like launching a new product or bridging a slow season. And investors love it because they can borrow from their policy to buy real estate or other assets, all while their cash value continues to grow. It's like having a safety net that doubles as an opportunity fund. Now let's talk about taxes, because this is where infinite banking really stands out. In Canada, when you borrow against your policy, that money is not considered taxable income. That means you get access to funds without creating a new tax bill. Meanwhile, the cash value inside your policy continues to grow tax deferred. Here's a simple example. Let's say you've paid $50,000 into your policy and it has grown to $100,000 in cash value. If you were to withdraw that extra $50,000, it would be taxed as income. But if you borrow $50,000 instead, it's treated as a loan, not taxable. That's a huge advantage for anyone looking to grow and protect wealth over the long term. Now, infinite banking isn't a magic trick. It comes with trade-offs. The first is cost. These policies usually have higher premiums compared to term insurance. You're paying for the guarantees, the cash value, and the flexibility. The second is commitment. It's not something you can test for a year and then drop. Infinite banking works best as a long-term strategy. The more years you stick with it, the more powerful it becomes. The third is discipline. Borrowing too much without a plan to repay can reduce the death benefit your family would receive. That's why it's important to treat your policy loan just like you would treat a real loan, responsibly. So, who is infinite banking really for? It tends to work best for people who have steady income and can handle the higher premiums. It's a great fit for families who want both lifelong protection and flexibility. It's also appealing to business owners and high-income earners who want to grow wealth in a tax-advantaged way while still having easy access to funds. But if your budget is tight or you only want the cheapest coverage, infinite banking may not be the right fit. Here's the bottom line. Infinite banking can give you control, liquidity, tax advantages, and the confidence of knowing you can always access funds without relying on traditional banks. But it only works when the policy is designed correctly and when you understand the long-term commitment. At Emerald Wealth Services, we help Canadians structure these strategies the right way, so they support your goals, not the other way around. If you'd like to explore whether infinite banking could fit your financial plan, visit us at emeraldwealthservices.com and book a free consultation. If this video helped you understand infinite banking more clearly, give it a like, leave a comment, and subscribe for more practical insights that can protect your family and grow your wealth. Thanks for watching, and we'll see you next time.